Welcome to the Loveland Report and Loan Arranger Show. I am Cleve Loveland, Central Florida's best and only real estate planner in Central Florida, alongside Bruce Woodburn, the Loan Arranger.
That would be me.
We're going to give you your real estate and your mortgage news today. We are going to get all this up. I got numbers, Bruce. I found the Board of Realtors thought they
finally found it.
I found the numbers. There was one-page report we could just click on. I could print it out. Some little tech nerd somewhere decided to be smart to spread that information across 50 web pages. So I found the report on sales. I've got that. Sales are climbing nationwide. We'll talk about that. Inventory is down in Central Florida, which is good. And I'm going to talk about the two biggest mistakes I see sellers, buyers, and landlords make. I'm going to talk about those two big mistakes that all those people make in the real estate market. We're going to talk about that. What do you got?
Yep. We're going to talk about what is going on with interest rates, what is happening in the market right now, what loan programs are people finding to be very popular right now. I'm going to talk a little bit today about non-qualified mortgage programs, which don't mean you don't qualify for them. It means that they don't meet Fannie Mae guidelines. So we're going to talk a little bit more about that, because there happens to be over 25% of mortgage applications in the United States today are alternative or non-QM products.
A lot of people out there like self-employed, and you're talking about bank statement loans, and non-QM doesn't mean, oh my God, it's 9%.
Nope. It's not subprime.
Yeah, no, it's not crazy.
Subprime.
It's not like
they're off. But what happened is we needed these programs because your traditional guidelines don't allow for a lot of people to get mortgages that otherwise should qualify. And they're prudent underwriting for these programs too, meaning that, like the old subprime, we're giving 100% financing to investors that had 550 credit scores and no money in the bank.
Yep.
That's not smart. So these programs allow for people that are self-employed or maybe high net worth but low income be able to qualify. So I'm going to talk a little bit more about that and what's going on in the market and how rates are doing right now, because rates are really holding steady. So we're going to talk a little bit about that and what is in the future for the Fed, so that you've got an idea of what to expect with the Fed this year.
Because I think it's funny, 2 years ago, we had sevens and high sevens, almost 8, and people were like, oh, I'm not buying. But right now, people are having to, Bruce. I come across very few people.
They've gotten used to it.
Yeah, and it's like the frog in boiling water. Don't drop them into boiling water, turn the heat up slowly. And so now, but 6% in the grand scheme of things is not a bad rate in the history of mortgages in the past 50 years. It's about the average. It's below average. And what I've seen is I run across very few people now, Bruce. Life has changed. They've moved on. Very few people have the 3 and 3.5% or 2.5% 15-year mortgage. And it's just, I see hardly any of those out there anymore. At least I'm not talking to those people. But I talk to a sampling of homeowners all over the spectrum, all different size loans and types and things like that. And most of those are gone. They've changed their plans.
A lot of them have. The folks that were in the 3s are less than the folks that are in the 6s at this point.
Yep.
And fortunately, I love to see clients that have loans. They call me and they're like, I need money, but I got a 2.5% fixed rate on here that I don't want to touch. Or I've got a 2.5 or 3.5% fixed rate on a house. I'd like to buy another one. I hate to get into the 6s. Why are you concerned about it? Your rental income's going to make up the difference anyway. Hey, I had a home buying class earlier this week. I did one on Tuesday for one of our clients. They wanted to bring their kids in. They had adult kids that they wanted to experience it. And then I had a few other clients that brought their kids in, and it was an amazing class. We got a lot covered. And I like to make sure that all of my clients and all my listeners out there realize that I'm here to help educate people so that they can have a better life. I really have found it very gratifying for me to be able to help young people experience homeownership, because a lot of them, Cleve, are being bombarded by the fake news that says houses are unaffordable. They're unattainable.
The market slows down. They always have those articles coming about why it's better to rent.
When you bombard people with that, they start to believe it after a period of time. And it's just not true. There are ways you can get in for little or no money out of pocket. There are down payment assistance programs available for first-time home buyers. There's rate buy downs that sellers are willing to pay right now. There is flexibility with debt ratios. There's self-employed programs for people that are self-employed. There's all kinds of ways to be able to make housing affordable. But when you look at it, and I think the news has programmed young people to say, it's not right for you to buy. Houses are unaffordable. The government made it ridiculous. Part of the problem that we have is the government. Part of the problem we had was insurance. But do you know that insurance has come down considerably?
Yeah.
Did you know that we're bringing in over 150 new companies
That's what we need.
into Florida right now?
Competition. Yep.
Did you know that 125 new insurance companies have petitioned for the state of Florida to reduce their rates?
It's the right market. Yep.
Isn't it interesting that you would have to get permission from the government to reduce your insurance rates?
I think what'll be really interesting, I'm getting some text messages about vote for the ballot, and on the November ballot, we're going to have some kind of tax program about cutting homestead taxes for homeowners, for your primary residence. I think something like that's just going to help our market move along. But we're getting good numbers around the country, Bruce, and the number of sales was up over last year. Now, this is funny. Nationwide, I always say, figure out what we're talking about, because 75% of all stats are made up. And nationwide, sales were higher than last May. Now, for Central Florida, they were slightly behind. A little different there nationwide, but nationwide and in Central Florida, median price rose slightly. So it's been flat, hovering around there. And what's funny is I haven't had anybody, I had two gentlemen that wanted to sell, but they just bought in the last 2 years and basically turned them into landlords. And because they would have, with the cost to sell, they would have lost money. And I said, let's just get you a tax write-off. Let's get you in the landlord business, and you tough it out for a couple of years. And we talk about it. And I review that with my landlords every year, Bruce, when we're getting ready to renew the lease. I say, okay, I think you're worth this. Do you want to sell, or do you want to keep renting?
If you can possibly keep the home you have at 2.5% or 3.5%, 4.5%, 5%, keep that house.
Yep.
And go buy another one and use that one as a rental, you will not be disappointed. And being a landlord is not that hard to do. But if you don't want to do it, Cleve will do it for you.
Yeah.
So you don't have to do it. But why would you give up an asset that's got equity in it and a low interest rate? You're not going to get those interest rates again. So unless you absolutely have to have the equity out of that property, why don't we look at possibly keeping it? And most real estate agents don't want their clients to do that because they want the listing. But Cleve has no problem in that. We want to help you grow. And part of what I was saying earlier is it's so gratifying for me to help young people realize that housing is affordable right now. You can do it. Is it a little higher? Cleve, I had to borrow money from my uncle to buy my first house. Okay. It was hard for me then.
One of my first landlords, young gentleman, got a job promotion to Japan 20 years ago, was upside down in the house, way upside down, and rented out. And he just called me and told me I paid it off.
Isn't that great?
Paid it off early. And he really wasn't cash flowing for about the first 5 or 6 years. Now, he did get a tax write-off, and the appreciation slowly came back, but he went through the first bubble we had in 2006, 5 and 6, when multiple offers coming in before COVID. And he's really now we're looking at the house, like the house is a little long in the tooth, needs a little bit of a remodel, needs a new kitchen, needs things like that. So we'll look at stuff like that, or we might 1031 it for a different one. So all these things I help people plan out when they need a real estate plan. But what do you, Bruce, I want to ask you one thing. This is what amazes me. I remember, I don't know if it was 2004, 5, and 6, a lot of arms out there.
Yes.
How come Wall Street didn't have the appetite? Because 4 years ago, we were saying, oh, inflation is transitory, not going to be here long. But if we would have had 5-1 and 7-1 arms, 3-1 arms several years ago, that would have helped some
They're
people.
just not popular in Wall Street right now. And it's amazing. Matter of fact, if I look up an adjustable rate for a 3 or 5 or a 7-year arm, they're actually not even cheaper than a 30-year fixed.
You do have them, but
we've got them. And I get a client will call for them every now and again saying, hey, I'm only going to keep the house for 3 or 4 years. Why don't we do an arm? The arms just aren't that attractive right now. There is no flavor for them on Wall Street. And I think that what happened is when those arms went bad during the recession back in 2008, it just didn't, there's not a lot of flavor for them for the secondary market to purchase them. So you know what? When you look at it, you go, a fixed rate's just going to be a better and safer product. I personally, I'm not afraid of an adjustable rate mortgage. Personally, I don't have a problem with them, but I don't think they're right for most people. And I don't think they're right for most people that think that they're going to sell and then they don't end up selling, or they think they're going to move and they end up keeping it. And then that adjustable rate adjusts. and it becomes problematic for them. People forget what adjustable rates did. I think that adjustable rates are good when we hit the high 8s or mid 8s. 407-250-9144 for the Lone Ranger. That's 407-250-9144. Or go to WeBringYouHome.com. Get your application started there or in person. On Zoom, we do it all. Every one of you will get my personal attention. I look forward to helping each and every one of you. Cleve, what's your number?
All right. You want to reach the Loveland Properties, need help buying, selling, or property management, 407-352-8118. We'd be happy to help you. I'll be working all day after the show.
Yep. And I want to mention to any real estate agents, financial planners out there that are listening to this, I am going to be doing a lunch and learn on non-QM loan products that I guarantee you real estate agents are leaving business on the table. So we're going to talk about bank statement programs, DSCRs, asset depletion, DACA loans, ITINs, foreign nationals. 27% of loan volume today are these type of products. And if you're not familiar with them, and financial planners, you've got people that you're working their assets and they want to move money around and you want to help them develop wealth, then help them develop some wealth in the real estate market, because a lot of your folks are self-employed and even CPAs can come to this. You're writing off all these folks' income to reduce their tax consequences. But on the other hand, they'll come to me for a mortgage and they want to buy an $800,000 house, but you only reported a adjusted gross income of $35,000. That's not going to cut it. Let me show you the products that can serve you and your clients better. I would like to be the person that you could refer that business to. And I'm always looking for people to refer business to that are good financial planners. 407-250-9144. That real estate class for non-QM is going to be on June the 24th from 2 to 4 in Maitland, Florida, actually. I hope to see you guys all there. Register at WeBringYouHome.com.
All right. So Bruce, I got some numbers here talking about the average sales prices and everything in Central Florida, and it's running we're up around 490.
It's incredible.
Yeah. So doing great there. Median price is around 400. Now this new stats that I have brings in one more county, brings in Volusia County, I believe. But it's the one thing I want to look at here, Bruce, is the average list price to sales price of all properties going back years. Right at, like during COVID, average price was 100% that it sold for. Listed for 500, sold for 500, sometimes sold for 505. But when you average that out, but looking over the past couple of years, even the past 5 years, it's still 98 and 99%. And the only time I see that dip is up above $1 million, because there's people rounding up there from $1.3 million to $1.5 million, and there's more room for negotiating on the higher end properties. There's a lot less buyers out there too. They got a little more buying power. But I just think that buyers, your realtor should be prepping you on what are the sales, what are your numbers, what do you need for closing costs? You do that. I mean, absolutely. I get a pre-approval from you that says they need X amount for closing costs and they're good to this price. Let's put them in the car and that's where we go. And I don't show it. If they're qualified to 450, we don't show them houses we show them houses at 460. We don't show them houses at 500, 550.
That's correct.
Number one complaint I get from people about realtors is I told them what I wanted and they showed me homes for 100,000 more.
Yeah.
Not listening. But I just think buyers need to understand, get into the house and get that done and ask for some closing costs. That's always much simpler and looks much better to the realtor.
Go ahead and give out your number. We'll be back in 5 minutes with more of the Loveland Report of the Lone Ranger Show. What's your number, bud?
407-352-8118.
Yep. Or call the Lone Ranger at 407-250-9144 or WeBringYouHome.com. Purchase, refinance, home equity line of credit, reverse mortgages. Doing a few of those today. I've got construction loans, renovation loans, you name it. I've got it. Self-employed investment loans, you name it. I've got it right here. The Lone Ranger, direct lender, no broker, soft credit pull.